Hi there, and welcome to Finance Focus with Andrew, a platform where we engage in conversation that endeavor to enhance our financial literacy. And I bring you another video focusing on the September 2025 Treasury bonds auction. It is very wise to make an investment decision, but it is equally dangerous to invest in something that you don't understand. And that's why I always make efforts to break down the Treasury bonds anytime the Central Bank of Kenya floats a treasury bond. Now, the September 2025 deals are out, and in this video, we are going to dwell with one of the three bonds that have been reopened, and we are going to deal with the SDB1 stroke 2011 stroke 0030, and we are going to explain all the features and everything that you need to know before you dive into this particular bond. Before we do that, I request you to subscribe, turn on the notification bell so that you get notified anytime we get to post a new financial tip, and feel free to share this video to whoever that you feel needs this information. Let's get down to what we are discussing in this video. Now, we are discussing the SDB 2011 stroke 2030. And I always say that we can always get three things from the Treasury bond title. Number one thing that we learn is SDB1. It is not an infrastructure bond, so it is a taxable bond. That is right. Now, 2011, this is a bond that was issued in 2011. So 030, it is a bond that had a tenure of 30 years the first time it was issued. Now, let's go to some important features that you really need to understand in case you want to invest in this particular bond. Now, number one thing that you need to get is the time to maturity. The time to maturity for this particular bond is 15 years. Why is it 15 years? And we have said that the tenure of the bond is 30 years. Now, this bond was issued in 2011, and the tenure was 30 years. So it means that this is a bond that will mature in 2041. But we are in 2025 here. 2025. So it means that this period here is the period that is 30 years. But we are in 2025. It means some 14 and a half years have elapsed here. 14 and a half years have elapsed. So the time that we are talking about this period here. So that is why the tenure of the bond is now 15 and a half years. Why is it important to understand the tenure of the bond? This is important because it should tell you whether it is a long-term investment, a short-term, or a medium investment. And clearly, this is a long-term investment. So it is important to get to understand that because so that you don't end up messing your cash flows by investing money that you intended to use for the short term in such kind of an investment. Remember, this is not an infrastructure bond, so we don't have a redemption structure. So when we say that the bond goes for 15 and a half years, yes, we mean it, 15 and a half years. There is no amount that will be given before the 15 and a half years is over. But again, remember, it is not cast on stone that you must hold the bond for the 15 and a half years. You can sell in the Treasury bonds secondary market or rediscount at the Central Bank of Kenya, but be keen because that comes at a cost. So it is very important to match your investment that you are making now with your financial goals. Don't invest money that is intended for a short term in long-term projects, thinking that you can easily rediscount or sell that investment. The other thing that you need to know is the coupon. The coupon percentage is the interest rate that you get to earn. It is what that you get to take home from this particular bond. And for this particular bond, it is at 12%. Is it a good coupon rate? For me, I would say it is good, and this is why. We are in an era where we are experiencing very low interest rate. For your information, the 91-day Treasury bill last week clicked below 8%. It is at 7.999%. So we are talking about interest rates of 7.9%, 7%. So getting a 12% with the same level of risk, because both are the treasury bills and the treasury bonds are government securities bearing the same risk. So if you decide to invest in the current era that is indicated by the treasury bills, you might get a 7.9%. So at 12.0%, I will consider that to be a good offer. Now, the third feature that you need to understand is that we said that this bond is taxable, and the withholding tax percent has been set at 10%. It means that out of the interest that you earn, 10% of that will be taken away as tax, and that is non-negotiable. So the maturity date of this particular bond is on the 21st of January 2041. That is the day you will get back your money, the principal amount, in case you decide to invest in this particular bond. Now, the period of sale is the days that have been is the days that the bond has been floated, that you are given a chance to make a decision and place your bid. And we have a very short period for this particular bond, because it is running from the 26th of August 2025 to the 3rd of September 2025. The bidding deadline is on the 3rd of September 2025 by 10 a.m. The settlement date is the day you ought to have sent your money to the Central Bank of Kenya. It is the day that you seal that deal with the Central Bank of Kenya. And for this particular bond, it is set at the 8th of September 2025. And the minimum amount, as usual, if you are doing a competitive bid, it is at 2 million. If you are doing an uncompetitive bid, it is at 50,000. And any additional amount, it's either 50,000 or a multiple of 50,000. The coupon payment, we know that bonds pays coupons twice a year. The interest that you are entitled for at the whole year, it is split into two, and for this particular bond, you will be paid coupons in the month of February and in the month of August. Now, the final thing that we might need to talk about is the pricing. Now, the pricing is important when it comes to reopened bonds. We know that for new bonds, the bonds are always sold. For new bonds, the bonds are always sold at par. That is, every unit of the bond will be sold at 100 shilling. But the story is quite different when it comes to reopened bond. Now, the price at which this bond will sell at will be determined by the market yield from that particular auction. As the Central Bank of Kenya gives the prospectus, they give a list of possible yields and the corresponding prices. For example, it is quoted that on that prospectus that if the yield is the same as the coupon, so here we have the yield, and here we have the price. So in case the yield is the same as coupon at 12%, the price per unit for this particular bond, that is the clean price. We have two prices. We have the clean price and the dirty price. Then it will be at 99.9774. So in case it is above this, as this increases, so as this side increase, this side goes down. Similarly, as this side reduces, this side increase. So, and it is the competitive bidders that have the chance of determining this side. So they will tend to bid a yield that is higher so that they can get a lower price. So the price of this particular bond, the actual amount that you get to pay for this particular bond, we cannot be able to tell it as it is now, because it will be determined by the auction. It will be determined by the market average yield that can only be determined after the auction. There is another important point that you need to know when it comes to reopened bonds. That is the accrued interest. When you talk about reopened bonds, there are two aspects of price. We have what we call dirty price, which is the price that you pay, and this price is equals to a clean price plus the accrued interest. Now, we have already said how the clearing price will be determined. It will be determined by the market yield that is determined during the action. But the accrued interest is already set. For this particular bond, the accrued interest is 0.9231 per every 100. Now, what is accrued interest? You realize that this bond pays coupons in the month of February and the month of August. So it means that the last coupon will be paid in the month of August. This is August here. And the next one will be paid on Feb 2026. But this is a 6 months period. 6 months period. But you will buy the bond in September. So you'll buy the bond somewhere here. This is September here. But in February 2026, you will be paid a coupon between August and February for the 6 months. So you'll be paid coupon for this entire period. But there is some coupon that does not belong to you here. There's small coupon here for the month of August, after the date which the coupon was paid, to the date that to the 8th of September when you start owning that bond. That does not belong to you, but you are the person who will receive that interest on Feb 2026. That is the interest that you have to pay for as you are buying the bond. That is what we call the accrued interest. I hope the point of pricing is very clear. The final point I want us to look at is coupon calculation. Now, what will you take home if you choose to invest in this bond? I will use an example of an investor who decides to invest 100,000 in this particular bond. Now, we are talking about a principal of 100,000 and the interest is at 12%. Interest calculation for treasury bond, it's quite simple because it is simple interest. So it is 12%. You multiply by 100,000. So for the year, you will be entitled to an interest of 12,000. But remember, 10% of this is withholding tax. So what belongs to you is 90%. And 90% of 12,000, if I'm not wrong, it is coming to 10,800. So this is your net interest, the interest that will hit your pocket. Now, we have said that this interest will be paid to you in 2 installments. So in the month of August, okay, we start from February because the next interest will be paid in February. In the month of February, you'll be getting 5,400. In the month of August, you'll be getting 5,400 for the next 15 and a half years. Then at the end of the 15 and a half years, that is in 2041, that is when you will get back your 100,000. So I believe that is the complete information that you need to know before investing in this particular bond. But in case you have any other question regarding this particular bond or any other treasury bond, feel free to drop it in the comment section and be sure that I will address it. In case you found this video helpful, give me a like, drop your question in the comment section, subscribe, turn on the notification bell so that you get notified anytime we get to post a new financial tip. And feel free to share this video to that person whom you know needs this information. Till next time, stay financially woke.